Bitcoin. Peer-to-peer digital cash, no banks, no payment processors in the middle.
Removing intermediaries altogether, that was the vision.
And it's been quite the ride, from this sort of anonymous concept to something discussed everywhere.
Absolutely. So we'll trace that journey, look at the mechanics, the pros, the cons, and there are definitely cons.
Oh, yeah, significant ones.
Yeah.
And then we'll peek at what the future might look like.
So where does the story begin, Toshi Nakamoto?
Right, the famous mystery figure or group, nobody really knows. Back in 2008, they published that white paper.
Proposing this, well, completely new electronic cash system, peer-to-peer network.
And the real genius, the thing the paper solved, was this double spending problem.
Yeah, how do you stop someone copying digital money? Like hitting structural plus C, structural plus V with cash.
Without a bank keeping the master list, basically.
Exactly. And Satoshi's idea didn't need that central bank. That was the breakthrough.
And then it actually launched pretty quickly after that, January 3rd, 2009, the Genesis block.
The first block mined. That's when it went from paper to, well, reality.
What birth of crypto, really?
And the core goal, this source highlights, was building a decentralized financial system.
Giving people financial autonomy,
Yeah.
Freedom from traditional banks, built on transparency, security.
Immutability.
All thanks to blockchain tech.
Okay, so blockchain, how does that actually work? The essay explains it's this decentralized shared ledger. Right. Think of it like a giant public spreadsheet. But it's copied across thousands of computers, nodes everywhere.
So everyone has a copy.
Everyone participating.
Yeah.
And every single transaction is recorded there, verified by this network of nodes.
And adding new transactions, new blocks to this chain, that's the proof of work part.
Exactly. That's where the miners come in.
Yeah.
They solve these really complex math puzzles.
Which takes a ton of computing power, right?
Yeah.
And electricity.
A massive amount. And that effort, that cost, is what secures the network. It makes it just too expensive and difficult for anyone to cheat or rewrite past transactions.
That effort is key. Okay, so this deep dive source points out several, defining features of Bitcoin.
Number one we've touched on, decentralization. No single boss, no company, no government controls it.
The network runs itself. If some computers go offline, it keeps going.
Yeah, resilience. Then there's the limited supply. This is huge.
Only 21 million Bitcoin ever. That's baked into the code.
Right. Unlike, regular money where central banks can just print more. This introduces digital scarcity.
Which is why people call it digital gold. Finite supply.
Potentially a store of value, especially when things get economically shaky.
Okay, the next feature is interesting. Pseudonymity and transparency. Seems like a contradiction.
It does, yeah. But the essay explains it well. It's not truly anonymous. Transactions are tied to Bitcoin addresses, these long, random-looking strings.
Not directly to your name or passport?
Right. That's the pseudo-anonymous part,
Yeah,
like a username. But, and this is the key, all the transactions between those addresses are public on the blockchain.
Anyone can look them up.
Anyone. So you see the money move, you just don't automatically know who owns the addresses involved, unless they link it somewhere else.
Like watching masked people exchange bags in public, you see the exchange, not the identity.
Good analogy. And once a transaction is confirmed and added to a block on the chain, it's basically set in stone. Immutability.
How's that enforced again? It sounded complex.
Well, it's the cryptography. Each new block contains a unique code, a hash, that includes the hash of the block before it.
Okay, like links in a chain.
Exactly. So if you tried to tamper with an old transaction, you'd change that block's hash.
Ah, and the next block already has the old hash recorded inside it.
Precisely. The chain breaks. The network nodes immediately see the mismatch and reject the tampered version.
Wow. So changing the past means redoing all the work for all the blocks that came after.
Which is computationally, almost impossible given the size of the network. That's the security.
Makes sense. And finally, it's super divisible.
Oh yeah, incredibly. Down to 100 millionth of a Bitcoin, called a Satoshi or SAT.
So you don't need to buy a whole coin. You can use tiny fractions. Makes it practical, potentially, for small payments.
See if it's fast enough, yeah.
Okay, so looking at its impact, how is this tech actually changing things? The source highlights a few roles.
Digital payments is one, especially cross-border. It can be faster and cheaper than old bank wires sometimes.
Because it cuts out the intermediaries.
Right, and that ties into financial inclusion. The essay really emphasizes this.
For people without access to banks.
Yeah, developing regions, maybe. Bitcoin offers a way to store value, send money, participate globally, just needing internet and a wallet.
No bank account required.
It's also become a serious investment asset. We mentioned digital gold.
that scarcity aspect again, a potential hedge against inflation for some investors.
And it really paved the way for DeFi, decentralized finance.
Oh, so.
Bitcoin showed you could build financial services lending, trading on a decentralized network. It proved the concept was possible, even if Bitcoin itself isn't the main platform for complex DeFi today.
Okay, so those are some big potential upsides, but the essay is very clear. Bitcoin isn't without its problems. Major challenges.
Definitely not. Number one on the list usually, price volatility.
Wild swings, up and down.
Driven by hype, news, regulation. Makes it exciting for traders maybe, but tough as a stable day-to-day currency or reliable store of value for, ordinary people.
Then there's the huge one, energy consumption.
Yeah, that proof of work mechanism. It uses a lot of electricity. Serious environmental concerns about its carbon footprint. It's a constant debate.
And regulation is still all over the place, right?
Totally. Governments are trying to figure it out. Some embrace it, some restrict it. That inconsistency creates uncertainty.
Makes it harder for businesses to adopt, I imagine.
For sure. And then there's scalability, maybe the biggest technical hurdle.
The essay mentions it can only handle about, 7 transactions per second?
Something like that, yeah. Compare that to Visa, doing thousands.
So during busy times, the network gets clogged, fees go up. Not great for buying coffee.
Not at all. But the source does talk about solutions being worked on, like the Lightning Network.
Right. What's the deal with Lightning?
It's basically a layer built on top of Bitcoin, like an express lane.
Okay.
Instead of putting every tiny transaction on the main, slow blockchain, users can open channels off-chain. They can do tons of instant, cheap transactions within that channel.
And only settle the final balance back onto the main blockchain when they're done.
Exactly. It's designed for those fast, frequent, small payments, making Bitcoin more usable for everyday stuff.
That sounds crucial. Okay, one last challenge mentioned, the link to illicit activities.
Yeah, historically, it's pseudonymity, data track criminals, money laundering, dark web markets.
But the essay makes a counterpoint there.
It does. It points out that blockchain analytics are getting really good.
Tracking the money.
Yeah. Because the ledger is public, investigators can follow the flow of funds between addresses. It's often becoming more traceable than bundles of cash, especially for large amounts. That initial perception is changing.
That's an important nuance. Okay, so we've gone from Satoshi's white paper, the tech, the features, the roles, the big hurdles. What about the future? Where does this deep dive see it going?
Well, one big trend is more institutional adoption. Big companies getting involved.
The essay mentioned Tesla, MicroStrategy, PayPal.
Right. Either buying Bitcoin directly or integrating it. That signals growing mainstream confidence.
And those scalability solutions like Lightning are developing. That's key for actual use.
Definitely. Plus, we're seeing more integration with traditional finance. Wall Street creating Bitcoin products. Banks exploring it as an asset class. Bridging the old and new.
The source even mentions speculation about it becoming like a global reserve currency someday.
It's a huge idea, yeah. Probably a long shot for now, but it shows the level of potential some people see in its decentralization and finite supply, especially if faith in traditional currencies wavers.
And there's a push on the environmental side, too.
A significant one. Lots of effort to shift mining towards renewable energy sources to address those footprint concerns.
Okay, so let's try and wrap this up. Reflecting on everything from this source. We've seen Bitcoin's journey. From that anonymous paper solving double spending.
Using that decentralized blockchain ledger, we looked at its core features that limited supply, the immutability, the pseudo-anonymous but transparent ledger.
We talked about its roles today, digital payments, helping financial inclusion, being digital gold for investors, sparking DeFi.
But also weighed the serious challenges. The crazy volatility, the energy debate, the patchwork of regulations, the scaling limits.
Limits that things like the Lightning Network are trying to fix.
And that history with illicit use, which seems to be getting harder due to better analytics.
The future, then, based on this analysis, seems to point towards, wider acceptance, maybe better usability.
Potentially deeper integration into finance, all while the industry tries to clean up its environmental act.
Despite this whole roller coaster ride and the hurdles it still faces, this deep dive really underscores something. Bitcoin's impact is already huge.
Oh, undeniable.
Yeah.
It's completely changed the conversation about money, about trust, about digital systems.
Which really leaves us, and you listening, with a big question stemming from this material. Where does Bitcoin ultimately land? Does it become the world's main digital currency for, everyday life?
Or does it settle into being this powerful, maybe niche asset, like digital gold or a foundational layer for new financial tech.
Thank you for joining us for this deep dive into Bitcoin.